let's get started. This is a disclaimer. You can read. You should read it very carefully, okay? So, first of just myself, I don't just invest in mining, okay? I have 3 sectors. I mean, invest in mining, in energy, and biotech. People say, oh, how can you, do all the 3 sectors? Because I work 3 times harder. So I'm trying to get all the different sectors, each sector running at different speed. Some can do very well. Like last year, energy did very well. And I have some biotech did very well. Last year, I picked #1 stock in United States, period. Okay. So I think I'm hoping this year I will repeat. I have quite a few other stock in other sector like biotech. I hope to be the #1 again this year. So, well, this is me. This is me with the CEO of a company called Seleno Therapeutic. It's a biotech, completely different, but it was #1 in America. My Japanese subscribers sent me this. It's even translated into all the different language. SLNO is #1 in United States. So, that's a key question. And for gold and silver investor, the Fed will cut interest rate this year, period, right? We don't know that. Unless something very, very strange happens, we'll cut. The key, a lot of people say, okay, inflation is not 2% yet, but if you look at the PCE, this is from Bloomberg, okay? The PCE for the food and energy, that is the Fed, what it's watching. This is already touched down to the 2% mark. Okay, for Fed, they have their green light to cut interest rate as early as March, but I'm not sure they will cut in March. They probably will stop QT and start QE again in March. There's a lot of, I don't want to go to too much detail with it because there's a lot of small banks still under stress in the United States. So they need to start QE again by March. So it's like a secretly cut, but not necessarily cut. So market will notice. And then this is actually Robert Sin had a very similar one earlier today. This is a New York Manufacturing Index. You can see here, if you look at this, you look at this, you can see it's going down very rapidly, 2 quarters in a row. So manufacturing in the United States is in recession. So there's another reason Fed has to cut. Besides, United States is running out of money with all the other reasons other newsletters rather talk about. So this is one of the chart from a very famous technician. They're on CNBC all the time, Carter Worth. It's called Worth charting. So he gave us a New Year pick. It's on their website, New Year pick. He thinks that's gold. It's going this year. Okay, that's one voice. I want to show you. There's also another voice. That's why I put it on my presentation. If you look at this carefully, you look at what happened with the contango, if you understand backwardation and contango. Gold usually goes contango and then bottom, and then when the contango goes up, the gold price will accelerate. Okay, so that's always the contango. If you reach a maximum, always a very reliable prediction of gold bottom. But it does not predict when gold will bounce back. I just want to tell you, don't be too excited. But if you look at this period, that's the 2000 period, okay? The same thing on this side. It takes a few years, okay? It takes a few years to bounce back. Same thing. Gold here, right? Gold actually even went down a little bit. This gold went up sideways for a couple of years before really taking off. So we could be 2 years away, 1 year away. It's possible. I mean, I'm hoping for this year, but I cannot say. I just tell you, don't be too excited. Because, there's a lot of excitement in the gold mining, in gold bucks, but may not happen this year. I just tell you from all the historical charts, there are people actually talking about, according to the history, the gold won't take off until in the second half of this year or later in the next year when Fed really start cutting interest rate. There's a possibility of that. But for our gold investor, okay, so we cannot just to chase them, right? So when gold really running, what are you going to do? So you need to anticipate and prepare for this. So this is what my strategy for 2024. I have a lot of people, I think Joe was talking about yesterday, right? There is a lot of people talking about the mining company, the margin got crashed last year due to high oil price, high material, high labor cost. Those are three major costs for the mining company. This year, it's going to reverse. I just did a critical interview because the oil price is much lower this year versus last year. Okay, material, steel, material, etc. is also went down. Labor costs kind of stabilized, right? So the mining company will enjoy a higher margin if gold stay the same as last year. So there's a tailwind behind the mining company. I want to point out that. So one idea really is to buy producer, because I believe producer will have better margin this year. Like one of the company I just recommend over there, it's sitting in the back. The idea is producer with higher margin and more free cash flow, they will do more M&A, will help the junior sector as well. So for juniors, I believe, okay, is to buy high quality juniors. So that's why you are here. And then there's all these wonderful company outside, and then there's 5 company here, and I own every one of them. So I'm very proud to have a 5 company here on my panel. And then you can check out their story. So I continue to diversify in different sectors. I'm still heavily involved in biotech and energy. I think actually biotech right now looks extremely interesting. So I hope I can make more money and then I can buy more, mining company, and then watching gold to take off. So there is, I think other people talk about a little bit. There's a lot of buying from China. I was just saying it's not just Chinese central bank, which they are buying, right? Chinese central bank is buying. But the Chinese people, half of my age, half of most people's age are buying gold. Okay, so I show you this chart. This is a very significant chart. You can see there's a huge diversion here. The China's premium. It spiked last year, but went down, but still very high, very high. The premium about $50 range. That's actually worthwhile people to smuggle gold into China. Seriously, there are people just from the border, from Hong Kong to mainland China, there are people smuggle gold because gold is more expensive in China than outside. Why is that? Because I want to tell you is the China story. Let's try to go to this. Hold on, I just want to see this one. Okay. So there's a lot of, just go to this slide first. There are a lot of people talking about the Chinese housing market. You have to understand from Chinese investor, Chinese citizen point of view, they have their life worth tied in the housing market, and the housing market is going down. I have a lot of Chinese friends that ask me, is it time to invest in Chinese market? My answer is don't even think about that. You see that? Seriously, I mean, as an investor, I'm not, pro-China or against China, but if you're an investor, you can look at this. The new housing start went down a lot, right? Almost down to where it was, but the housing under construction, you look at this chart. For any investor, if you just think about that, I don't want to touch Chinese housing market for the next 5 to 10 years. It just takes that time for this chart, for this line, to go down to where it was. Okay, you have to come down. The housing under construction, that means new inventory coming to the market, right? They have to sell. They even sell at the lower price of today's price. Those has to be gone, to be cleaned up first. So there's no hope for the Chinese housing market for the next 5 to 10 years. So a lot of people, they heavily invest in the housing market. And then stock market is terrible. Everybody knows it's on CNBC all the time. So where do they invest? So that's where it comes from. That's why people are investing in gold in China. Ordinary people, not just central bank. So that's become driven the premium of the gold actually in China versus outside. That's actually take a lot of ETF selling from United States and Western world into China, which is real, gold buying. Anyway, I just also want to say that China, a lot of people have very negative point of view in China, and I want to say it's not exactly like this. China is very good at certain things and very bad at certain things as well. So I have been telling my subscriber, my friend, my family for the past 20 years, do not buy Chinese stock. Actually, right now, I think it's so much negativity on CNBC, it may worthwhile looking at buying Chinese stock. There some are really, really cheap. So what is China good at? China very good at export. This is just updated. There will be a new update, probably around $1 trillion surplus in China, right? What is driven? Driven by the car. China will be #1 in the car export last year. Okay, will be more even this year. It took Japan like 20 years to become #1 in the world. China just took it in a few years from this to here. So what did they do? They sell all these cheap electrical cars around the world, right? From Mexico to Africa to Middle East, right? Those people, they like a new car, cost them only $10,000 or $15,000. Yeah, you have a new car. And then this combined with solar panel and then cheaper battery, you don't need a gasoline infrastructure. You have to think about all the other places, and it's not like Canada, United States. They don't have reliable electricity, don't have a gas station everywhere, but then they can have an automobile to drive around. So for them, it's a new demand. This new demand throughout the world, that will increase the demand for material. It's very important for the investor to think about all these material, copper to steel to anything, and then silver, which is my favorite. I will talk about that next. The China CPI looks terrible. That's fine. We all know that. So that's why Chinese citizens are buying gold. It's not not just government. Chinese citizens are buying gold. They use gold as a hedge for the uncertainty. So we have a real interest rate. I'm trying to get to silver. Okay, this is the silver outlook. And I want to show you this chart. I want you to go away with this chart. And this silver, we are in a stage of silver imbalance, supply and demand. Okay, imbalance that we haven't seen in the past 100 years. And the last time it happened is in 1950s. You look at it in the 1950s. And what happened at that time, the film industry, right, the Kodak film used silver. They took a lot of silver. What happened in the 60s, United States run out of silver. We used to have a silver coin. And then in the 60s, the silver was removed, right? 90% silver to nil, to nothing. Right now, all the quarters has no silver in it. So this lead to silver shortage. And also, you notice the production quadrupled, silver production because of the silver shortage. Can we quadruple the silver production? Not at this price, right? Maybe $100 ounce, maybe we can double it. So we are facing a serious gap in the supply demand, lead by the solar panel industry. So I'm trying to give you, I don't have too much time. I want to give you my prediction on solar panel industry. And it's more accurate, has proven to be more accurate than so far the prediction of the Silver Institute and then Metal Focus Group. So last year we have a huge increase of solar panel production. And then silver is increased by about on the 70% range, okay, last year. But there was overproduction of solar panel. In Europe, they're in their warehouse, they estimate 100 gigawatts of solar panel in the warehouse. They bought, they haven't really installed. So this year we'll see a very big drop in the solar panel increase, okay, so about 20%. Okay, but don't worry, because historical is still very high. I'll show you one thing is very significant is the technology. While the solar panel growth go down, the technology advance. This TOPCon technology, which actually add another layer of silver, use up to 50% more silver than traditional, is taking off in 2024. Okay, 60%, 80%, according to the latest research report I got from China. And then if you compare this was by Trendford, very famous firm. Okay, their prediction last year was the TopCon. You can see that TopCon will take less than 50% this year, but we will have 66%. They will go down to here, and next year go to 80%. So the technology in the solar panel that's used more silver actually advanced much faster than people expect. So which means actually we're going to use much more silver this year than last year, on top of what we have, the big deficit. So the point I want to make is that the silver usage in solar panel is still accelerating. And then this is the solar panel cost. This is one of the energy sources that's going down. We saw uranium exploding. We saw natural gas expensive. Actually, solar panel is one of the technology actually still going down and going down, going down. Last year, the solar panel cost was cut in half. Okay, last year alone. So solar panel, the cost, energy cost is getting cheaper and cheaper. It becomes the cheapest way to create energy in the world. So this is what we have in United States, 2022 and then 2023. You can see the price, the big drop in the price already. Oops. Let me see. So 2024 will be another big drop. So eventually the solar panel will become so cheap. I mean, you can just bring one to the beach. You can charge your phone. You can do whatever. It will become really, really cheap. You can put it somewhere else. It's a very cheap way of energy, not just because environmental, social, whatever, but it's a cheap way to have energy. You have some energy to charge your phone, to watch TV, to do whatever you like, to camping. Especially good for the camping, this way. And then this EIA report support this. And then solar is really taking off. And then this is a report by famous ANZ Bank. They predict 50%, 55, 1.5. The silver will usage will be 50 by next year, 2025. Very close. I think they're still conservative because the growth, the wild card for the solar panel is last year have a huge inventory build up, right? So this year we have a big drop in growth. But what if happened because the costs go down so much, the demand start picking up? They will pick up at a certain point. What if they pick up? That's a wild card. So if that pick up later this year, then we're not talking about 20% growth. We could be at easily 40, 50% growth. How much silver will be used? So this is silver long-term chart. You see it's still in the consolidation. And okay, that's a pattern. I just want to say is I feel silver will take off, but we look at gold first. I believe gold will take off first, and silver usually will come back, and then it will be stronger than gold in the second half. So for investor, it's a good time to accumulate some high-quality silver asset in anticipate for that. But you can watch for gold. I think the first will be gold will take off, and then followed by silver. And then platinum is another example. Platinum I like. I was just talking to one of the investors talking about that because platinum right now is too cheap, below $1,000 an ounce. It's too cheap. It's cost about $1,500 at least to mine it out. So at this current price, 1/3 of the South Africa platinum mine will be forced to close down. Okay, so they are selling you because of all the manipulation. If you believe manipulation, or all these people believe there's people shorting platinum, so you're getting a very good bargain at below $1,000. This cannot last. And difference of platinum versus silver, platinum is primary platinum mine. So platinum at this price, platinum mine will have to be closed down. So you're buying at below cost. That's the bottom line. So I'm buying anytime below $1,000 in the past year. I've been buying platinum. I use the future market, but you can buy an ETF. And then above 1,000, I sell some. So I've been doing that exercise for over a year now. So far, so good. Okay, I think platinum will probably go to a 1,200 range at least to make sure that the mining company can break even, right? To have a supply to come on. So yeah, this is let's see. Okay, we're almost done. So this is one, the money on the sideline. Okay, right now it's even more. It's 6 trillion right now. So there's so much money on the sideline. Once Fed start cutting interest rate, money flow into mining company. That's a lot of company will run. So you need to prepare for that, anticipate. So that's why I want to. I have. So let me just come to a conclusion. Okay, I think we believe we are in a super cycle, and not just gold and silver and many other metals. And uranium is doing great. And you can look at all the different sectors. I hope you have a diversified portfolio because one can do very well, one can do very bad. So you can balance a little bit.